introduction, inflation is defined as a sustained increase, which is the general index number of product and service in an economy over a period of your time. When inflation rises, the purchasing power of the cash is reduced. As consumer, we have to hand over extra money to shop for the identical quality of the product and service.
Hi, my name is Faiza. I will present to you about the question number 1, which is the question: discuss detail the problems above, including meaning of inflation, why economy is concerned, what incentive can negara provide at this time to overcome problem in inflation. Malaysia's inflation rate rose 2.2% in September 2020. CPI increased 2.2% in September 2021 to 1 to 2.8 against 1 to 0.1 in the same month of the preceding year due to the base effect last year. The increase was mainly driven by a double-digit increase of 11% in the transport group due to the government setup of RON 95 petrol ceiling price to RM 2.05 per litre in March 2021. This followed by food and non-alcoholic beverages 1.9%, furnishing household equipment and routine household maintenance 1.7%, housing, water, electricity, gas and other fuels 0.7%, and recreation services and culture 0.6%. Both restaurant and hotel and health registered a marginal increase 0.3%, while alcohol, tobacco was 0.4%.
Hi and Assalamualaikum, my name is Nuraniza binti Nasir. I will present for question 2, which analyse diagram about inflation and economic growth from 2050 until November 2021. The first situation I would like to share is that the inflation rate is the highest rate, which is 4.2 until 4.9% in year 2017. This increase happened because the inflation rate of the income category below 3,000 in March was 4.7%. Mainly affects people with low income as opposed to those with high incomes. This is due to the fact that low income people spend more money on necessities that are mostly under government control, in addition to getting cash transfer assistance from program like Bantuan Rakyat Satu Malaysia (BRIM). The Statistics Department announced the transport index, food and non-alcoholic drink, restaurant and hotel were among the major grouping that had risen in December 2017. Furthermore, some vegetable and fish record a significant increase in December 2017. Additionally, because of the Good and Service Tax (GST) was in place at the time, inflation was at 3.7% in October 2017. The second situation is where the lowest inflation rate occurred, which is in year 2020 with rate negative 0.2 until negative 2.9%. Since COVID-19 reached the world, the crisis had resulted in sharp drops in the world oil price in March and April as a result of global travel restrictions that dramatically reduced demand for energy supplies. Strict movement restriction also causes significant supply interruption at the start of the crisis, which in turn increased price pressure for several essential food goods. Since the start of the epidemic, Malaysia has had minimal inflationary pressure, mostly as a result of the low price of oil globally. Some industries that had previously been forced to shut down operation were discovered to still be dealing with weak demand circumstance when the economy reopened. Thank you.
My name is Asma binti Cik Muhammad Razali. Today, I would like to present about the number 3. Describe several effects of inflation on Malaysia economy as a whole, including KLCE, Bursa Malaysia, rate of the overnight policy rate (OPR), and a base lending rate. Show diagram or chart if approved. KLCE Bursa Malaysia. The graph shows how the effect of inflation in KLSE Bursa Malaysia. The effect of inflation on Malaysia economy in KLCE Bursa Malaysia is decreased for investor. Rising inflation impact the important return on investment. The KFLCI decreased 147 point or 9.36% since the start of 2022. Per trading on contract for different CFD that trade this benchmark index from Malaysia. Rate of the overnight policy rate (OPR). The graph shows how the effect of inflation in rate of overnight policy (OPR) increase the interest rate. The effect of the inflation on Malaysia economy in rate of the overnight policy (OPR) in turn have an effect on employment, economic growth and inflation. The Financial Growth Organization of the Malaysia raised its key overnight policy rate by 25 basis point to 2.25% in July 2022. The official rate is that the overnight policy rate, the rate in the Malaysia is predicted to be 2.50% by the top of this quarter, in keeping with the trending economy global macro model and analysis expectation, which in the long term the Malaysia rate of the interest is projected to trend around 2.75% in 2023. Next, base lending rate (BLR). The historical data analysis how the effect of the inflation in base lending rate increase their rate of the interest. The effect of the inflation on Malaysia economy is base lending rate generally higher interest rate as a policy response to rising inflation. Conversely, when inflation is falling and economy process slowly, central bank may lower interest rate to stimulate the economy. Asset like realty and contribute usually maintain with inflation. Wherever interest on loan increase during inflation. Bank lending rate in Malaysia increased to 3.68% in May from 3.56% in April 2022.
Assalamualaikum, my name is Nurul Daud. Next, I will present about the monetary policy instruments, including qualitative and quantitative tools that can reduce the problem of inflation by the central bank. Quantitative measures of monetary policy are those that focus on the supply of money. It consists of a discount rate or bank rate, legal reservation requirements, and funding. Firstly, we can look the discount rate or bank rate. The discount rate or bank rate is the rate of interest that the central bank charge bank when it lends them their reserves. When the bank rate or discount rate change, it change how much it costs for banks to borrow money from the Bank Negara Malaysia. For example, if the BNM raise its bank rate, the interest rate on loan will go expensive. Those borrowing become more expensive and demand for loan will be reduced. At the end, the bank will raise the interest rate they charge their customers, which will make people less likely to want to borrow money. As a result, purchasing activity will be reduced, overall price will decrease, and as well inflation will decrease as well. Secondly is legal reserve requirement. The legal cash reserve requirement is the minimum amount of cash the Bank Negara requires all commercial bank to keep in the BNM. This will affect the number of excess cash reserve in commercial bank. And BNM can vary cash liquidity ratio based on the situation. If they raise the required reserve amount, commercial bank have less money, which reflect their ability to lend to client, and the money supply will decrease. For example, a bank need to have a total cash reserve before this 10%, but after rise in ratio, it become 30%. The bank can only be used for loan or investment by 80% only. So this means the amount of the loan is less. In conclusion, ratio reservation increase, the ability to provide loan will decrease. This situation will lead to a decrease in the supply of money, and make purchasing activity will also reduce. And lastly, inflation will reduce as well. Last is funding. Funding means that the short-term loan are turned into long-term loan. The goal of changing short debt to long-term debt is to let the central bank make more than one credit. For example, the government will sell a long-term bond with a high maturity date to make investors not to hold liquid cash. It is to reduce the money supply in economy. In conclusion, when people purchase illiquid securities, the general public expenditure decrease, the money supply decrease, and demand for money also decrease. It will result decreasing in general price, and inflation will decrease as well. Next, monetary tools, instrument for qualitative, which is include of a special directive, moral suasion, and selective credit control. First, we look at the special directive. Through Bank Negara Malaysia, the government will tell what steps they are taking to bring down inflation. BNM will tell commercial bank to cut back on how many loan they give to the public. The central bank will to get commercial bank to put limits on their lending policies, just as required collateral, guarantors, and other steps that will borrowing likely. Secondly is moral suasion. During any inflation period, banks are recommended to restrict loan. It means that the Bank Negara Malaysia put pressure on the commercial bank to stop it from borrowing a lot from the Bank Negara Malaysia, so that the commercial bank would lend less to the public. The goal is to reduce the amount of money in circulation to stop inflation. Lastly is selective credit control. Selective credit control is the practice of setting credit limits for different type of businesses. This is done when the flow of credit needs to be slowed down, especially for speculative activities in the economy. Using these tools allow Bank Negara to limit unsound credit expansion. For example, higher purchase restriction can be used by the banking system to limit credit during times of inflation. According to BNM, the commercial bank should only offer loan for constructive users and limit the amount of the non-performing loans. That's all for me. Next, we go to the conclusion. Thank you.
As a conclusion, in general, a decrease in total supply to match an increase in total demand result in inflation. By raising the availability of goods and services and decreasing the money supply, it can be managed. In order to manage aggregate demand, incomes, high inflation may negatively affect a certain nation. There are extra elements that may have an impact on Malaysian inflation as measured by R-square value is not higher than 60%. It demonstrates that the three key factors that have been covered in this study are only few of the causes. It has an impact on Malaysia's inflation. The government should try to reduce the unnecessary spending on non-development activities in order to address the issues of high inflation in Malaysia. Inflation is a major problem everywhere and will not only affect the country's economic growth but will also affect the CPI, labour market, investor on investment, and additionally, this will restrain private spending that is reliant on government demand for products and services. It may be suggested that this measure be better reinforced by taxation in order to avoid this kind of predicament. Well, that's all from us. Thank you.